today we're going to be talking about on triggering on the little bit of training, but I'm going to take the advantage right now as I see it fit in this type of training. So let's just assume that the market actually indeed gets into the pullback towards the zone or close enough. As you can see here, the market has pulled back multiple times. So the trick of the trade on triggering, I'm gonna share with you one of the best trigger scenario that I've seen and that I learned from one of my mentors. So this is not mine, obviously, but obviously I wanted to share with you because it's very widely usable and very accurate. It's with the 38 and 34 and 8 moving averages, exponential moving averages. Once again, exponential 8 and the red over here, it's a 34 exponential. Okay, nothing else. Everything should be applied to the close. All right, so what is the triggering in this case, Carlos? Well, let me just explain to you how this works out. I'm going to use this example. Let's just use this as an example. You notice here that the 1 hour chart, the moving averages never cross, right? Meaning in this case, we would have triggered this with a prior pivot low close to the downside because of obviously the moving average never crossed towards the upper side. So this validates a continuation towards the downside. That's pretty much most of it. Now, if you were looking for a triggering, but you don't know exactly when that's going to happen, you're probably going to take a look at something like this. So let me just set this self up so we can just drop down on a time frame here. Let me just drop down to, let's just go as slow as 15 minutes. All right. Let me see if we can just find that. Here it is. All right. So here's how you're going to take a look at it on 15-minute chart. Let me take this out of the way. And this is the area, all right, of the pullback that we were talking about. And you were waiting here, okay, Carlos, when would be the best scenario for us? I see the market pulling up. So we were expecting a pullback in continuation then to the downside. So as you can see, this is powerful stuff because we are contrary to the tendencies of the actual market. Remember, we're mimicking the big time players. So when the buyer pressures of the retail traders are kicking in, we're looking for a sell setup as soon as possible. The only difference is that we would like to filtrate these signals or this actual scenario because obviously the market is going up and we're shorting against it. So it's just not plain and simple the fact of saying, okay, reach this level, so I think this is as high that it's going to go. Although we're going to teach how you can plot and understand which of the specific numbers that will come in. But in this case, I don't want to complicate things, make it easier, meaning that we use, as you know, a couple of filtering. In this case, is the pivot steps, so on and so forth. But just forget about the pivot step. Let's just use plain and simple the triggering system using moving averages, meaning the pullback is here. Now, all I need to do is wait for the confirmation that I can enter the market. But when would this be? Well, we're going to be using price action. No pivot step or no anything like that. Obviously, you're going to see that the pivot step will help you 10 times better when you include the whole thing. But today, basically, we're going to be using price action. This is the highest high, and it's coming from this low. So this is the important low. So based on price action of what Carlos says, it looks like we need to wait for this break to come in, and they should take the most important low that they left behind. Obviously, it could be this one as well. All right, so it could be this guy right there. All right, so that will dictate more or less the price that need to be broken to the downside in order to confirm the intentional move. Now, the second actual trigger has to be, and this is once again from one of my mentors, it's a dual action, taking the most important previous support base level with a combination and confirmation of the cross of the moving average to the downside. Let me show you how this looks. If we go one step further, nothing happened. Now, here's where the cross or the close of this important low came about. See it right there? Now, do you see here that the cross of the moving average has not yet been cleared? It means that this will not be the trigger. The trigger will be when the actual cross happens. So the next 15-minute bars, you can see it, the cross came about, and that would be the entry. So in this case, we would have short the market in here, right, and place our stop in the most important prior pivot high. I will always use the highest high, but I'm just giving you the thought process of going into using pure price action. So our stop loss should be beyond this level right there. Okay, and that's basically it. The market just continued down, and in this case provided us with, let's see, about 40 points. This is the triggering system that I would like to definitely always provide to you as a very straightforward, powerful, and it doesn't matter how many years has passed, will always be very good. I mean, it's not 100% guaranteed, but definitely think about it. We are actually allowing the price action to let us know the direction, and then we're just confirming that direction with the cross of the moving average, plain and simple. So yes, the moving averages are lagging indicators, but we just need the confirmation. Why? Because we already knew that while the market was coming up, we had like a huge synergy zone, which is exactly what we provide every day for you. And even if the zone was not reached, this is how we doesn't miss out the trade. All right, so this is very powerful stuff. So I hope you learned this a lot. This is part of my mentoring program. I'm just giving this away to you guys. You can apply it in your own stuff, and if it doesn't work, then obviously I don't know what's going on with you. Maybe you are combining too many things. You have probably too many indicators in your chart. That is, one is saying buy, the other one saying sell, other one saying it's going nowhere, and you're completely overwhelmed. Just clear out the clutter. Clear it out. Start from scratch. Plain and simple. Price action, and the two most the oldest indicators so far that it's been used for years, hundreds of years, have been the moving averages. They work, they keep working, and even though they are lagging indicators, we're here to confirm tendency so we can just jump into the wave, right? Not call it up ahead. That's what the synergy zone is all about. We're just identifying high probability reversal point, but we don't trade them right out of the spot. We just know that around this area, the market should hold and start coming back down in this case, but we don't jump in. We need to confirm it. All right. So once we confirm it, we get in. And then obviously you got target price and everything that we provide to you, but you will also learn how to apply it and obviously extract the most on the target price and so on and so forth. The simplest way that we use on Foresight FX is obviously try to find on pattern of triangles, which is very simple stuff right here. Take the width of the triangle right there, and talking about 25, and from the breakage we're talking about 25 points. That is going to provide you target pricing, and that would be your exit. That is the simplest form, more powerful stuff, and you can add it up and use it on any type of trading, currency, futures, stocks. It works. Plain and simple, it works.